Hey everyone, it's Ankit. Welcome to a brand new video. Today I want to talk about the Fed and what they have done recently. Not all of them, but some of them. If you're excited about today's video, then drop a like. It really does help out with the channel and support everything I'm doing. Leave a comment with what you think should happen to the Fed and what consequences should the Fed have after doing this and why. Subscribe if you are new for weekly videos on investing and about life. Let's try to hit 1 million subscribers. With all that out of the way, let's get into today's video.
And then by Bloomberg, disclosing a number of multi-million-dollar transactions being done over the course of 2020 by Dallas Fed President Robert Kaplan, covering individual stocks like Apple, Facebook, Verizon, which is actually Yahoo's former parent company, in addition to, in some cases, a floating rate bond ETF. And then you have the Boston Fed President Eric Rosengren, who has disclosed he had several transactions in separate real estate investment trusts. Now, because the trust of the American people is essential for the Federal Reserve to effectively carry out our important mission, Chair Powell late last week directed board staff to take a fresh and comprehensive look at the ethics rules. Now, whether or not this could change anything remains an open question. Whether or not that review will be public remains an open question. But regardless, the Federal Reserve spokesman adding later in that statement that this could lead to a tightening of rules and standards. We have to remember that the Fed board is the head that presides over the 12 Federal Reserve banks, which all have codes of conduct that in many cases are similar to one another. But again, never a good thing when the code of ethics is necessarily in the news cycle. We'll see if the Federal Reserve chairman is pressed on this topic. Is that when you unpack the rules, at least at the Federal Reserve Bank level, there is a wide prohibition across ownership of any bank or depository institution. That makes sense because the Federal Reserve is a major regulator over the banking industry. But outside of that, a lot of the Federal Reserve banks have language that say it is okay to be invested in stocks or even bonds of companies that are not tangentially related to the banking industry, as long as they don't have any sort of substantial banking business, that it actually is allowed. And when there is gray area, as long as the Federal Reserve official clears it through their ethics officer, which is inside the Federal Reserve Bank, not necessarily coming from the Board of Governors in Washington, D.C., then it's an A-OK for them to invest in that. Now, it's possible that you can put some sort of restriction in place that would say you can't hold stocks of any sort. Again, we'll see if the Federal Reserve wants to do that. Another way this could happen is if Congress wanted to move on that. We saw an interest from Senator Elizabeth Warren, the Democrat from Massachusetts, writing a letter to all the 12 reserve banks saying you should all be imposing a ban entirely on any sort of stock trading within 60 days. We'll see if that's going to happen, because this type of letter writing isn't necessarily a mandate for them. But of course, Congress does have the power to legislate that into law if they wanted to, and maybe Elizabeth
under the Fed ethics rules, but he's addressing this issue to avoid any appearance of conflict. Obviously, this story comes after disclosures that Robert Kaplan, the Dallas Fed president, was involved in multiple trades in excess of $1 million over the course of 2020. And Boston Fed President Eric Rosengren also involved in a series of trades involving a whole matter of stocks, Dow, Alibaba, it looks like, AT&T. He owned a bunch of residential mortgage companies and other mortgage companies, Verizon. Most of his trades, however, are much smaller than Robert Kaplan's, all listed between 1,000 and 50,000. But there were at least, I'm looking at the form now, 50 purchases and sales of stocks during the year.
50 transactions during 1 year.
So documents released last week reveal that Dallas Fed President Robert Kaplan made multiple trades worth $1 million or more. And here's the document. As you can see, Form A, his signature, all the companies he bought: Apple, Alibaba, Amazon, Boeing, Chevron, Google, Johnson & Johnson, Tesla, Verizon. So this document has all the stocks that he bought with all the information that they've been getting. I don't know how this should be also, if the public had this information, we could have bought in early on some of these stocks and made profits too, just like he did. But no, I don't know how this is not. Yeah, I still don't know how they're not in jail for this. After using the inside information that they have. And I don't know how, you know, after you receive information about what happened last year with a thing, and then you go and buy all these stocks after you know that the Fed's going to prop up the market, and then it's going to lower interest rates. So as you can see, they bought all these REITs, they bought all these real estate companies, they bought Pfizer because they knew about the vaccine. AGNC and LY, they knew it was going to go back up because they were going to prop the market back up. So I don't know how none of this is not considered insider information when the public doesn't have the information that you guys are having these closed door meetings, and how they're not in trouble for it. But if it was one of us, we'll be in jail or had to come to a plea agreement with
owned mortgage-backed securities. He made 37 separate trades during 2020. The Fed last year purchased almost $700 billion in MBS. Rosengren announced last week he would sell. Fed Chair Jay Powell held between $1.25 and $2.5 million of muni bonds. The bonds were purchased no later than 2019 and are just a small part of his overall portfolio. They were held, however, while the Fed last year bought $21 billion in munis. A Fed spokesperson, he held 1.3 to 3 million in individual corporate bonds purchased prior to 2020. He held these bonds while the Fed last year bought 46.5 billion of corporate bonds. Barkin declined to comment. He had no say, however, over individual bond purchases by the Fed. These holdings or trades do not appear to be barred by Fed ethics rules, but they raise the question: should those rules have banned officials from holding or trading the same assets the Fed bought after it widened those types of assets it would purchase? In response, its own code of conduct says officials should be, quote, careful to avoid any dealings or other conduct that might convey even an appearance of conflict between their personal interests, the interests of the system, and the public interest, Kelly.
Which is a pretty broad statement. So,
quote, to think that such trading is acceptable because it's supposedly allowed by the Fed's current policies only highlights that the Fed's policies are woefully deficient. And as you know, Kelly, in response to
off a few of them kind of get at this direction. And number one, has this always been the case that Fed officials held a lot of securities while they were, while they were in their positions? Number two, were most of these positions or all of them taken before these people became Fed officials? It sounds like they obviously were not, although a lot of them may have been made before the pandemic. But still, number three, is there any limit to how much trading they can do, or the kinds of, is there 30-day rules or something like that? And number four, I guess the most broad observation here is, based on their own code of conduct statement, anything that would give the appearance of a conflict of interest, this would certainly fall into that category. How could it not?
Number four. As to number three, I believe, I'm not sure. I think the issue here, the broader issue, Kelly, I'll just try to take all three with this one comment, which is that the Fed dramatically changed the assets that it purchased last year. What happened is that they didn't change their ethics rules to account for this. It seems more like one of omission rather than commission. In the case of Powell and Barkin, they both previously owned those shares, did not buy any additional during the year. In the case of Rosengren, he bought it all through the year, and his ethics officer, I guess, signed off on all this. You can see that there is a blacked out signature on his disclosure form, so he did not believe he was breaking at least the letter of the ethics rules. Subsequently, however, well, what do they think? Well, Kaplan and Rosengren both said, hey, we shouldn't be doing this, so perhaps they're now acknowledging that.
You ask them what they held in their portfolio and what they trade?
They come out as disclosures every year in the forms, Melissa, and it's not something we often ask them about. It becomes a matter more we talk about policy and the economy, but it appears that they have been doing quite a bit of trading, and it's now, I think, an issue.
Yeah, certainly is. Steve, thanks so much. Steve Leisman.
Real estate or interest rate sensitive stuff. I mean, if you're a Fed official, you're going to tell me you don't have an insight into where we are going in interest rate sensitivity. The real cynics would say, If he's now going to go to cash, it's time to see the Fed get a lot more aggressive, and everyone else should be very concerned. I'm not saying that that's what's going on, but if I hear a Fed official saying, I'll go to cash right now, again, I think this is a function of him saying, I'll do whatever is what's the most appropriate thing, but he's acknowledging what has come out in the last 48 hours, and we talked about this on Tuesday evening. And I think we would all agree that a lot of different federal officials and even the members of Congress that have so much insight into policy that will move stocks top down or bottom up need to be regulated. And the irony is, of course, that individuals are regulated that much more without that kind of information.
Information that we have at our fingertips at any one moment that impacts stocks on a second-to-second basis. It could be a case that the rules just haven't caught up with where we are in time.
So insider trading, here's the definition of it. And I'm going to pause for about 11 seconds. I want to see what you guys think. Do you think what the Fed did is insider trading? Let me know in the comments below what your thoughts and opinions are about this situation. I consider it inside trading. They had information and they went inside, had a meeting, then they went out, probably changed their portfolio, invested in companies. Let's have a discussion about this. Thank you.
They should have been smart enough to understand the optics around this are just awful. And we talked about it Tuesday night. And by the way, I'd like to think, in some small part, some single-digit percentage, maybe the things we've talked about over the last 2 days help spur this on. So he's the first. I'm definitely sure he's not going to be the last. And it should filter its way into the members of Congress as well, because, people at home get agitated, exercised, mad, angry, whatever word you want to use, and you understand why they do. They look at this and they say the game is rigged. It's the big guys, the guys and gals that have all the knowledge in the power positions that benefit the most. And whether that's true or not doesn't matter. That's what
the playing field and the perception that the playing field is not level in the first place, Karen. This really adds fuel to the fire. If you say these guys have inside information in some way, whether information have some sort of inside direction as to where things are headed, the system is going, and we're the little guy left on the sideline.
The little guy should be upset about it because they do have access to this information. They make this information. Not only do they know what it's going to be, they help craft it, right? The idea that there isn't any kind of regulation on trading that's kind of surprising to me. So,
and the idea that they represent the people. Congress represents the people, and yet they can have a committee hearing on something that could directly impact a stock or sector and still be able to trade in those shares.
After finding about all this, Powell orders a review of the Fed ethics rules after the stock trades made by the senior officials. Now imagine if that was one of us and we got all this information and we did what they did, we would probably be in jail. Now think about this: the market is crashing, and you're having a meeting, and you're talking about lowering interest rates, purchasing all the debt, and then getting all the rest of the information about what's going to happen to the market and how you're going to double the Fed's balance sheets, prop up the market. Now, you get all this information, and then you go back, you adjust your investments, and you start buying up stocks that you know about, and what stocks to avoid. You got all this information, so why not just use it, right? Well, how is that, fair to everybody else when they have the information and they're abusing it? And it's not public information because it wasn't public back then, but they had all this information, and we're just finding about it recently and a couple of months ago. This would tick people off. It would tick me off and tick you off as well. So I don't see how this is fair, and there should be rules and regulations for this.